Okay, what's going on, everybody? Just to do a little quick video here. We got some chart requests. I have a little bit to talk about in terms of price action this past week. As we all know, and if you're listening to this from the future, this was a very choppy, slow, just in general, not a very tradable week. We lacked data on Monday and Tuesday, even into Wednesday. Wednesday we had a midday data drop. Thursday morning we did have data, but still really hasn't cleaned much of anything up right now. So, just to touch on that a little bit, of course, that's something that I wanted to touch on as well. But I think it can be clearly stated that, one thing that you really, want to put an emphasis on as a part of your game plan going into a specific day or even intraday, right? Is if you cannot really identify the draw on liquidity, meaning you could see two areas in which you think price could likely draw to, but you really can't get a grip as to where it's likely to go to with a very kind of bulletproof type analysis, then it might just be a better day to look at maybe individual names or maybe just not trade at all. I bet you this week people have been really getting beat up as a result of this, because you're going to notice when I pull up this chart in about 30 seconds here that despite having a decent idea and a decent thesis on both sides of the coin, to me it's not very clear cut. And as a result of that, I really haven't been looking at any futures trades or index trades outside of the silver bullet times, in which, this morning I was able to catch one, but no follow through in terms of, that kind of breakout, or in this case it was a short, so breakdown type trade. And as a result, you'll notice that we kind of remained in the same type of range that we have throughout the week, and ultimately that is it's just a difficult trading environment. It's really not high probability. So but with all that being said, let me just show you what I mean by that. So if we were to take a look over here at NASDAQ, we're looking at the hourly time frame right now. You'll see that we had our range from this low up to our high here. This low was the turtle soup move that dates back to Thursday morning, or 10 o'clock on Thursday. This was following that little bit of a wicked FOMC on Wednesday. I'm sorry, 1st of May, and this was leading into that non-farm payroll, which this Friday candle, you have your non-farm payroll imbalance here, in which we have not yet seen. You're also going to notice that despite all of this action, and this is really where it becomes the most difficult to me, because at a certain point you would anticipate some sort of retracement, right? Especially after we've taken out buy side over here, right? So we got into this imbalance here. We still have one level, 18,350, in which we have not yet gotten into at the moment. But you'll notice, look at this. This is a lot of chop, and this is really from Monday afternoon on, right? Monday was a pretty nice up move to extend our range, but not much more than that. We've really been coasting, right? And one thing that I tend to look for in terms of decision making is when you create some sort of range, when you've taken out some sort of liquidity and you haven't made that imbalance candle to the upside, my next order of thinking is, okay, well, I'm going to wait for an imbalance to form on the downside, and from there I'm going to look for that discount retracement in what we currently have as a bullish range for that Mando model completion back up towards those highs. Now you'll notice here, especially when I zoom in, hold on, come on over here, and as I continue to zoom in, you'll notice we've created an imbalance here, rejected off it multiple times. We did get a decent move off of that. This is over 100 points, but you'll notice that even despite all of that, I mean, this to me is not an imbalance in which I'd really value all of that much for a multitude of reasons. One being we already filled it. Two, we got into it. And again, this is not really a tradable imbalance for me, because the way that I look at it is I would prefer to catch things in in discount of my range, right? And in this situation, this is well in premium or over 50%, right? Because in reality, and I know, it is very difficult to do this while looking at the indices, but if you're looking at it from this perspective, right, what is your risk in this trade essentially, right? It's a big range, right? And your upside is rather limited in terms of what your potential risk would be versus what your potential reward would be in this situation, right? But with all that being said, you'll see how we got into the imbalance yet again, rejected one more time, really catching air, or an hourly imbalance, or order block here, I should say, which is linked to a smaller time frame level, which held, which typically you wouldn't really value the smaller time frame over what you would have on a higher time frame. And even throughout, if you look at really any candle that has occurred since then, there's not been any imbalances formed, and that's typically red flag number one, and really the market telling me not ideal, probably not the best trading conditions, as no imbalances are forming. I really don't have all that much to work off of, right? I don't really know a specific part where I should be placing my stop loss. I don't really have a clear entry point, right? The draw on liquidity is, it's either going to be your highs or your swing low, right? That's really where we identify as targets. But it's a lot easier when you have some sort of game plan in terms of your entry and stop out. So all in all, NQ has not really been a very tradable name this week, and that's fine. But again, this kind of goes back to the point where, and not every week is going to be that beautiful price delivery in which you get many opportunities. The opportunities are pretty few and far between, and with that, that can totally lead people to pressing unnecessary buttons, if you will. And simply put, how can we avoid doing something like that, right? And if we were to go to a higher time frame and we notice that there are no imbalances forming, it's really not structuring any idea for us, right? We could have smaller time frame imbalances and everything, which is all good and great. But when we look at the higher time frame and we're really not showing an imbalance in either direction, meaning like there's no real clear sign in terms of where price wants to go at this moment, right? So I think somebody said today, is it? Am I crazy for thinking or going long at this point, or something? And simply put, one, to be completely honest with you, I don't know. I'm not in the ballpark in terms of where I think price is really directly going at the moment, right? I can't identify that draw on liquidity at this exact moment, and that's okay, right? You're not going to be able to always know exactly where price is going. Do we know where it's going more often than not? I'd say so, and I think a lot of other people would also echo that. But at the moment, I don't have a clear read, right? So that was simply my response was, do you have a clear draw on liquidity? If you do, great. If not, then what is that telling you, right? And that's really the whole point in all of this, right? If it's not clear as day, we don't really have to do anything, right? No one's forcing us to do a thing, right? And you'll notice, and I bet you you might not see it much on Twitter because it's fairy tale land, but I bet you a lot of people are not having a good week right now, right? And to me, by me taking minimal amount of trades, I think I've taken 4 this week, 2 and 2, is slightly in the green, but to me that is a win, because in the past this would be a week where I got smoked because I'm trying to push buttons. I'm trying to get out ahead of the move. I'm trying to front run the move, right? When in reality, to me, it's just much easier when you wait for the market to actually show you the direction that it wants to go, and it will, right? There's so many opportunities, right? Just zoom on back, right? We can go through each one of these, and you're going to see how much more clear price is in these certain situations, right? Okay, let's just look at the most recent run from low to high. Here's your discount retracement. Here's your imbalance down here in discount. Here's your turtle soup move, right? Can we justify that? Sure. Do we have like a basis in terms of what we can trade off of here, right? Absolutely, right? You don't really have that up here at the moment, right? We have this imbalance, but price has not been rejecting it, right? And what is that telling us? There's a chance that this range is just not set, and that's fine, right? Do we need to see 350 first? Possibly. But until I see some clear-cut sign that it's time for us to retrace at this point, I'd rather just be late on it versus trying to front run it and being wrong and continuously getting stopped out, because that's a situation where the stops will add up. And I don't want to be in that position, right? I don't feel the need that I need to be pressing buttons right now if I don't feel 100% in terms of directional bias, right? And of course I'm not always right, but at least I'll have some sort of structure, right? If I'm going to just try and short off of this, right? One, range is pretty big, which stinks. We have relative equal highs up here now. We've gotten into these imbalances multiple times, right? I don't really believe that these are going to carry all that much weight at this time, right? Could they? Sure. But to me, that lessens the strength of my thesis for that retracement lower. So what I would prefer would be, again, just another imbalance to form, and more often than not, you're going to get the retracement back into it, and that's fine by me. I can take action off of that versus trying to front run it to get the imbalance, in which I don't necessarily know I'm going to get at this exact point. So I know that's kind of been the theme of the week, where we've been talking about like avoiding the chop. I know it's boring. I know everybody wants to press the buttons. Everybody wants to make money. That's why we're doing this. This is why we spend so much time. This is why you're even listening to this video, right? That is the ultimate goal. But I think it is very important. And this is, I'm talking to you guys, but this is me talking to myself as well, because there's been situations where I've had quote unquote relapses, and I've been trying to do too much when it just wasn't presented to me, right? And sometimes you might be eyeing something, like for example me eyeing this bearish fair value gap, and I tried it. One of those few trades that I took this week, it was off of that hourly imbalance. Look, if that melted down, great. There was no carry through, or no follow through, I should say. There was no follow through with it. So be it. I got to pivot. I got to be able to move on. And if I were to miss one, for example, let's say our next imbalance down never comes back into it and melts down. That's okay. That's fine by me, because I now have the next step of my plan in place, ready to go, right? So it all builds off itself. To me, again, this is just my game plan always, and I stick to it as best as I can. To me, there's no reason to try and front run moves. Sometimes can they be clear as day after a higher time frame liquidity sweep? Maybe, right? But oftentimes you're going to notice that when we paint that imbalance, whether it's going to hold or not, right? For example, whether this holds or not, at least there's some sort of structure, right? And each time that you would have attempted this, you probably would have made out okay, right? Rejected. And so far we're coasting here. Why don't I feel as good about it now? Well, we've been in this imbalance like 7 times. The word is literally imbalance. If price is getting in there and hanging out in there, what is it doing? It's balancing that price range, right? So that is my point there, in which I would just much rather prefer to be a little late, right? We have a good idea of where price is going, and more often than not, I'm guilty of this too. If we see this massive range, more often than not, we're going to take the first target, and by we I mean me. I'm going to take that first target, probably get out. It's going to retrace back into the bearish fair value. Maybe I try again, but very, very seldom do we get a move where we are retracing. Let's just use this as an example, from 231 down to 17,826. And I'm not swinging these contracts either, so that's 400 points. Very, very rarely are you going to get 400 points in one day and be holding throughout that entire thing, right? And that's why I would just prefer taking profits at a specific target, waiting for a retracement to try it again, right? And play it that way. So that's just my thoughts on the current state of delivery with the indices. Just not the best week. It is what it is. This is what we saw last August quite a bit, where we could have a pretty good game plan, but it's just not presenting itself at the moment for us, right? And again, if that's the case, the best thing for me to do in that situation is avoid or go look at something else. And it's as simple as that to me. So um, so that's that. But now I want to get into some specifics because um, I put it out there that anybody who wanted something specifically, I'll get into. So first up, we're going to look at GE on the daily time frame. Okay, so here's GE. Let me remove these. Okay. Whoa. All right. So as you can see, this has been an insane run. Okay. Now let's just go all the way down, and this is where you know, you can look at this right off the bat, and I'm going to tell you that the weekly range is going to be much different than what it would be on a daily. So if we were just to go back low to high, discount retracement, you have your volume imbalance right here. Hold on, I'll just zoom in for this. Okay, here's your volume imbalance, deep in discount. Whoops, there it is. There's your run for highs. Okay, so after taking out this high, we would like to slide. What was the price run that took out this high right here, right? Now I could say this high here, but you're going to notice that this is an even smaller time frame Mando model. From low to high, you get your discount retracement. Here's a bullish imbalance, okay, fractal. There's your run for highs, okay? So in this situation, I'd say there's my low that started the price run that ends up taking out that high, okay? And here's where it gets annoying, right? There's your low to your high. Whoa, no discount retracement. Wah, wah, wah. This would be a situation where we miss. Actually, multiple instances here, but there it is. There's your run for highs. And now you're going to notice that your wide range, or your, I guess this would be more of a monthly or a weekly range, is really, really big, okay? But if we were to be looking at something like this, which, just to be straight, like, this is not really my type of chart to trade, just based on the, I hate using this word, but I'm going to use it, the extension of what we currently have, right? But with all of that, we can go back and we can look at this from an even smaller blip in time, right? Because inside, right, we can go to specific runs, okay? So what do I mean by that? Ready? I see a high taken out right here, okay? That high was taken out with what price run? Okay, let's go back and see. All right, from this low to that high, notice how there was no discount retracement. That's fine. There's your discount retracement. Great. Let's just see if there was some sort of imbalance so we can justify that. And if it's not here, it's on. It's going to be on another time frame. Well, we have a volume imbalance here, so that would be for the wick, but also there's your bullish fair value gap right there, and then there's your run for highs. Okay, so let's continue on here. Here's your low that took out this high, this being our new high, right? And I'll slide over the blue bar in a sec. Okay, ready? There it is. Good. Okay, and you're going to notice that despite that retracement, I know some people who do this, where they go from greens. Me specifically, I tend to do this with the green run specifically, but in that case, your range is set. But regardless, whether you want to go from the actual low versus the consecutive green run, you're going to notice that either way, whether you're here or whether you are here, because we did take out highs with this price run, right? Either way, you have this massive daily volume imbalance down in discount. And I know we are, again, well, quote unquote, extended, meaning that we're in price discovery and we are, we're currently well in premium of what we got cooking here. So you'll notice that we do have a bullish fair value gap there. Look how price tapped it and closed above it. Does this necessarily mean that that won't get mitigated? Not quite. But then you have that volume imbalance there as well. Ultimately, this being your only discount imbalance here, which is still quite far away. At what point would I look to play short on something like this? Well, wait for some sort of daily imbalance, or for this bullish imbalance to get mitigated, meaning the imbalance is filled and we start to move below it, right? Otherwise, not really for me. So that would be GE, right? If we were to get in here and start to move higher again, it, you know, just not necessarily a trade for me in that situation. So that's GE. Now let's go to FDX. Whoa, it's got that look, hey? Okay, so let's just zoom out. All right, so here's your first. Actually, you know what? Let's just I just do this to echo, you know, efficacy, I guess you could say. There's your low, it's your high. Oh, not quite my model completion there on that price run. See how close we were to the discount of that range. But here's another example. So we took out this high and that high with this low to that high, discounted, check, run for highs, beautiful, on to the next. And really, even from this point, we could look from multiple perspectives. But discount retracement, run for highs yet again, relative equal highs right here, boom, boom. Okay, most recent price run from this low to this high. There's your discount retracement, bullish imbalance, multiple down here. There's your run for highs one more time. So what we're currently working with on FedEx is this, from that low to that high. We are currently in discount. Beautiful. Okay, and you'll notice that one thing that looks pretty good about this here is, let's zoom in. Okay, we have this volume imbalance, which is good. This is something that we talked about earlier in the week. When we gap down into discount, oftentimes we paint bullish order blocks, and this would just be one of those instances here. Now there are a bunch of bearish fair value gaps or volume imbalances in the mix here. So that's just something worth noting, but let's just go over here. I want to see. Okay, so here was just the completion from last time when we charted this out, but here's your low, whoops, to your high, currently in discount, holding the bottom of our weekly imbalance. Okay, now a question that a lot of people have asked in the past is, you know, when we're in discount and there's a bunch of imbalances, like how do you go about that? How do you know which is the right imbalance, right? And I think that's a great question, and it's really difficult to, you know, precisely or say that, but something that I found on my own is that when you have that type of situation, it is pretty good or pretty good practice to go to lower time frame or higher time frames. I'm sorry, higher time frames, to just see how it works out, right? Because if you look over here, you're going to notice there's many imbalances down here still on the daily, right? But if we were to come over here to the weekly, to me, this is much more well defined, knowing that, okay, here's my imbalance that I'm, you know, actually trading off of. Here is, you know, the stop, or where I would likely stop out of this, and then my target being the highs, right? So it's much more structured, and you'll notice that there's no more weekly imbalances down here, right? And as we move up in time frame, I'm sure we'll see something very similar here. Ironically, you're going to notice something very different here. So if we were to go from a monthly perspective, you'll notice from your low to your high, you got your discount retracement into a bullish imbalance. Now, on the weekly time frame, right, you see how the Mando model is much more incomplete, right? Meaning low, high, discount retracement. We've had multiple in previously, right? We went through those. But if you come over to the monthly, we haven't even completed its first one, right? Back up to those highs at 319. So just another thing that's worth noting here on the monthly time frame is there's your monthly fair value gap that we're also in, right? So this is just a way that you can build the thesis through multiple different time frames, especially when it's a little, I don't want to say it's, you know, it's not as clear, but it is a little hazy here, right? There's so many more imbalances that you could be looking at, right? Oh, well, there's one. Hold on. Here's another. This is the fair value gap. Here is another right here, fair value gap. Okay. Here is, nope, not quite. Here's another one right there. That's a fair value gap and the volume imbalance. I'm just being lazy and not mapping both of them. Here's a very small fair value gap right there. So you see that there still are a lot of imbalances down here. A lot of them have been filled, but you know, to me, why would I think this is a pretty good one and just coming on over and You look, see, okay, this is the last bit of our weekly, and look, even if we're wrong, the risk reward is just it's not even close, right? This is like 4 to 1, right? Make 40 to risk 10. Then you look over at the monthly, and it's like, whoa, even better. Okay, if I use this from the monthly perspective, then I even have more potential upside. Is the trade going to take longer? Probably, but still, just using that overall idea. So this turned out to be, this is a great look here. This good eyes by Kale, but yeah, no, this is a really interesting setup here for sure. So that's FedEx. So now let's go back over here. We got another request here over with Chewy. So let's zoom out just a tad and see. Okay, so relative equal highs up here right off the bat. Worth noting. Okay, clearly a bearish range. So I know you, the person who had requested this, wanted to see the week, but I want to see the weekly as well. So since the last time we charted this actually made another new low. Okay, following this imbalance right here. Whoops. Okay, so we're approaching a weekly bearish imbalance, right? If we are bullish, we would not anticipate this causing much problem, right? A sweep of these relative equal highs, so you have another set of relative equal highs above. Again, you guys are getting good at this. You're spotting these setups. Now here is another set of relative equal highs, 1874. Let's just make sure. Oh, these are the same. Whoops. Okay, but above that 1874, you also create a bullish breaker. Okay, so that's worth noting. So now back to this daily time frame. And while range is still bearish, is it time for some sort of retracement? That's the question. Here's a bearish fair value gap right here. Okay. You'll also notice you have your, I'm sorry, ready? This fair value gap or volume imbalance, I'm sorry, right here. Boom. There's your bounce. Okay. So at the moment, showing some respect for these bullish PD arrays or setups, right? So far so good. We actually just cleared a volume imbalance to the downside as well, with relative equal highs right here, in which we took out one. So to me, likely going to sweep that 8 cents higher, and then from there, our next level really is that 17.20, and clear that, because at the moment, actually, if you want to be really technical about it, which is fine, but with the relative equal highs, this is just a sketchy trade for me, right? And this, to me, doesn't meet the requirements for the Mando model. Although it looks like it, it's not, and I'm going to explain why. Despite having, what was the price run to take out this low? High down to our low, right? Sweeping that low. Now we, in a perfect world, we would anticipate a discount retracement into that bearish imbalance and then a rejection back down towards lows. Why would I not value this as a Mando model, right? And it's just based on the fact that we have these relative equal highs above. This is, a turtle soup candidate also with those relative equal highs. To me, that is an area in which I think price will draw towards, knowing that you have two pools of liquidity resting in that price range right above these highs. So that's why I would not value that or look to trade my model off of that. So that would be Chewy on the daily. Now let's come on over to the hourly, because that was also requested. So to me, a ideal situation. So we can just go through just a few to show the efficacy. Ready? Low, high, discount retracement, check. Bullish imbalance. Do we see one on the hourly? No, not necessarily. Let's go back over here to May 1st and see if we can find where we're bouncing from. Whoops. May 1st. Bingo, right here. There's your volume imbalance right there. So does that kind of make sense for a place to bounce? Sure. It's just a higher time frame level. So now let's keep on sliding over. Okay, what was the price run that took out this high? Low to our high. Here's your discount retracement into a bullish imbalance. Okay, there's your almost, not quite, but you also notice we had relative equal highs. That's the one we talked about before. So to me, in an ideal perfect world situation, you would get, let's just see. I'm just mapping out some more smaller time frame highs, right? And that 720 looks familiar. Where do we find that 720? 720. There it is. 720. That's the start of the bearish fair value gap. So that would be an area of interest. But ideally, for that run, I would prefer to get a sweep of these relative equal highs, some sort of discount retracement for ultimately a run into that 1720. And at that point, it's fair game. Anybody's ball game, right? At that 1720, you have a discount retracement. You have that bearish fair value gap. But again, this is not really a situation where I'd be digging a short, and that's, in short, just based on the idea that we have relative equal highs above, right? So that would be Chewy. All right. So now let's go over to CGC. This was another request. Okay. All right. So right off the bat, I see low, high, lower low. So a break above this high right here would be a bullish breaker. Huge range, but bullish breaker nonetheless, right? The entirety of that candle we could view as a level of support at this point. Sorry, I'm yawning all over the place. I'm really tired. But here is your, whoa, bearish fair value gap that we did not quite get into. And here's another one. Nasty wick. But where we currently sit, we have a smaller time frame bullish breaker, or shift in structure, right? Here's your low, high, lower low, a breakthrough, retracement down, right, into that breaker, right? High of that sequence. There it is. It should be in black. There's your breaker, and then there's your move so far. You'll notice today the low of the day was what? The volume imbalance. Preferably for me, again, this is just me, could this be enough in order to springboard price into this area up at 1920? Very possible. Me personally, I would prefer something like this because it is smaller time frame. We took out this high with that price run. Okay, we are in discount. Did we get into this? If we got into this, then it's a different story. Yeah, we did. Yep. Okay. Well, ultimately, at this point, I think we do end up making our way back up towards that high to complete my model. I know it's sloppy because of the wick, but nonetheless, and this really could be a low resistance liquidity run with a lack of higher time frame levels here in between this high and that high. See the wick? These are all smaller time frame levels. No weekly imbalance, no, maybe a daily imbalance, but that's all. So that's CGC. Okay, let's keep running through these. Let's see. Sorry, I just had to answer. Okay, so let's see. Adobe Weekly. Okay, we are in discount for sure. Right, there it is. We do have a breaker down a little bit lower. Okay, just worth noting. Let's see, because again, this would be just a situation where you have multiple weekly imbalances. So if we were to look at it daily, forget it. You're going to have a million more, right? So how can we be as precise as possible, right? So let's come on over to the weekly. And hopefully the weekly doesn't have a bunch down below either. Okay, so now we're over here. Look, see, there's a difference. Instead of having 1, 2, 3, 4, 5, we now have 2. Okay, so which is going to be the winner? That's the question, right? We do have relative equal highs at this point. Okay, right? And I know you might say, dude, there's 50 points in between, right? Why am I considering this a relative equal high, right? Well, if we were to look left, you're going to notice that we filled this imbalance up. So we don't have higher time frame levels from a weekly perspective, or a monthly perspective. I'm sorry, we're on the monthly chart. So with that, knowing that we don't have levels above this, we would anticipate this being a draw on liquidity with a void in any level that would restrict us on a higher time frame from ultimately getting to this point, right? I know it is a big gap in price, and I would not anticipate it going from 638 to 699 in a short period of time, but ultimately above that I would feel very comfortable with price going up there, knowing that I don't have any more higher time frame levels to kind of compete with. Okay, so if I'm just looking at it from it's from a basic kind of what's the word here, I guess just the whatever's right in front of me in terms of looking at it from a much wider scale, I think it's fair that we can consider something like this to happen. Okay, get into the monthly fair value gap. With these monthly fair value gaps, I know we've got our discount satisfaction, so we really wouldn't anticipate this being too much of anything. But think about how many orders are coming through on a monthly time frame, right? To create some sort of imbalance over a month's period of time, you would anticipate that level to be kind of strong. Maybe not, just the way that I'm viewing it. But I would anticipate a rejection there, meaning what? If we're to reject here, ultimately, I think we'd have to go get some more liquidity, right? Sweep these lows. And then from that point, ultimately, I think it would be something like that, and then bing, bing, whatever. But I don't take these monthly imbalances lightly. Oftentimes, even if it is counter trending, if you will, they tend to still carry some weight. So I would not be surprised if we got into that monthly fair value gap and rejected to get some more liquidity prior to our ultimate move higher. So that would essentially get us into the breaker. 451, let's just see over here. Yeah, right around that area. So taking out that low would, to me, definitely get us into there. So that's Adobe. Okay. I'm just pulling up the list. Okay, Pan W. Okay. Pan W. Okay, monthly fair value gap. So far, so good. Okay, here's your weekly. You're going to notice there was a big earnings dumper a couple weeks ago, or months at this point. There's your massive dumper. So far, so good. Your next weekly imbalance is up at 327. Okay, we gapped higher 2 weeks ago, creating a bullish volume imbalance, in which we're still currently in. Okay, so look, if we look at it from, we should really go down to a daily to look at this, because it's going to be a little bit more clear. And let me just, I know the levels are accurate, I just want to clear it to make it look a little bit more clear. So now you'll notice that we have discount retracement, bullish imbalance, run for highs, check. Okay, here. Took out these highs with that run, low to high, discount retracement, bullish volume imbalance or gap, right there. Run for highs, beautiful. Low, whoops, wrong one. Low to high, whoops. Discount retracement, check. Sloppy, gap down in a bullish in a bullish range discount, often creates a bullish order block. Run for highs, okay. Now low to high, pretty close. So there's your first volume imbalance here. You do have one below. Is there a situation where we can get into that volume imbalance? For sure, right? And that would be something that I personally favor. I tend to go towards there, and let's just see how that level lines up with what we have on the higher time frame. So about 290, that gets us in here. So I don't think we need to revisit this weekly volume imbalance here, per se. So, And why would we reject where we rejected? Well, we do have a bearish fair value gap right there. Pretty perfect, huh? Alright, so let's do win now. And then new core, and then we'll call it quits. Okay, why would we reject here? Again, here's, and I know this is the monthly, but again, this is why I respect the monthly imbalances. They tend to react quickly. So there's your first rejection off of the monthly. Okay, you'll notice that we do have relative equal highs here. Okay, here's one and here's the second. There's a rejection off of that. Now, if we were just to draw or map our range just from this little blip in time, yes, we got into discount, but the fact that we could not get up and through, right, this monthly bearish volume fair value gap, that leads me to believe that I think we could be targeting this first. Okay, that's just from a monthly perspective. Let's see if that lines up with what we got here. Low to our high, discount retracement. Okay. Okay, decent, right? Lines up pretty well, right? We rejected here, right? You might be looking at this and saying, why would we reject where we reject that? It doesn't add up. There's got to be something, right? And then you look over here and it's like, oh, okay, it makes sense now. You got a monthly volume fair value gap here. And you'll notice these are order blocks, and I bet you we're going to find some more imbalances as a result of these order blocks here that are rejecting, right? So with that being said, let's come on over here. Ugh. See how as you go up in time frame, the chart just like progressively just gets way cleaner. Yeah. So from the daily perspective, this is our first range shift, if you will, right? And what was the number that we were talking about before over here? About 79. Let's just say 79. Where does 79 get us? Oh, higher. That looks okay. Yeah. Maybe a turtle soup of this low here gets us into that daily volume imbalance here. And that'll turtle soup these lows as well. You got the relative equal highs up here, but in the meantime, not really an ideal setup for me. You got a bearish fair value gap here, and you also have a, yeah, I feel pretty good about this going lower, but high, low, higher, high. You have a bearish fair value gap in tandem with this. Where's the low of the sequence right here? That would be a bearish breaker. So you got some levels. We're in the breaker right now. So do we get into this and reject lower and head for these relative equal lows? Right? Second low is not lower than the first. Therefore, you have orders or stops here, and you have stops here. Okay. So that's win. And then let's just knock the last one out. New core. Okay, new core is creating a monthly bearish fair value gap. Price would have to get up into 80.53 to prevent that. Right. So let's come on over here. Okay, so let's look at this from a quicker or smaller time frame blip in the radar. Okay, solid. All right, and you do have an imbalance right here. Okay, so discounted for sure. Let's just come back over here one more time and let's see. Not bad, not bad. Okay. So do we see the change in structure at this point? You have a weekly imbalance here, right? Your monthly imbalance not yet formed, 180. Where's that? So if we are to prevent this at 180.53, that gets us into, whoops, 180.53. I'm just trying to freehand it right now. Okay, let's just say for the purpose of this, it gets us into here. That prevents the monthly fair value gap from forming. Now, if we were to break this down into the weekly, you're going to notice that same level that we're looking at on the monthly to prevent also lines up with this. What is that? Bearish breaker. Okay. High, low, higher high, break down below. We would anticipate that low of the sequence to act as a resistance if price were to get back up into it. Have we satisfied our discount retracement at this point? Well, we did get into discount for sure, but if we were to look over here as well, okay, here, here, and here, okay. So now the question, where am I at currently on this setup? Well, let's just go down to the daily. One more thing. Okay. That's pretty good. Okay. You have that gapper, of course, and you also have that daily breaker. High, low, higher high, break down below. What's the low of the sequence here? Be that. Boom. Okay. So that's just kind of a way to structure an idea, right? And here's the thing. I can kind of justify this pretty good in both directions. We've gotten into discount. We got our bullish imbalance. Now, ultimately, our expectation would be a run for highs, right? On the flip side of that, you have that bearish breaker, right? Price could very well get into there and just get deeper into discount. That's the tricky part. So this is exactly where I would identify your showtime imbalance, right? This is going to give you all the answers moving forward, right? If price is to shred this, no problem, then guess what? We're going to be going to those highs. If price gets into here and rejects, then we know we can target that low, right? So that's just a way to look at something like that, where you kind of have a conflicting idea. But that'd be new core. So. But that's all I got. If anybody has any questions, feel free to reach out, and we'll get after it tomorrow.